Hello, I'm Michael Kopinski, the Director of Research at Noble Capital Markets. This program is about energy and utility infrastructure, and it features Energy Services of America Corporation and its CEO, Doug Reynolds. The stock symbol is ESOA with a market cap of about 13 million. In this program, we discuss how the company is changing to become a more consistent and predictable earnings company, and how the company is recovering post-COVID. We're fortunate at Noble to have an expert, transportation and logistics analyst, Poe Fratt, a best on the street all-star analyst as surveyed by the Wall Street Journal. He will interview Doug Reynolds, the CEO of Energy Services. And before I turn it over to Poe, I encourage you to stick around for closing comments when Poe and I will discuss the key takeaways from this interview. Please enjoy the program.
Well, thanks to Doug for joining us this afternoon. Doug, why don't we start off with a short overview of the different types of work that Energy Services of America performs?
Thank you, Poe. Energy Services of America has two portfolio companies, CJ Hughes Construction and Nitro Construction Services. The CJ Hughes side of the business does underground utility work, natural gas, oil pipelines, as well as water, sewer, both transmission and distribution. The Nitro Construction Services is a general electrical, mechanical, HVAC, industrial contractor that works in a lot of large plants.
Great. Would you talk about how how bids come in for you to for potential work, how you analyze those, and then how you draft your bids?
Well, a large section of our work comes in terms of blanket contracts, unit-based pricing. Customers, especially distribution and smaller work, is more on a cost-plus unit-based basis. Larger jobs are often bid as either lump sum or also unit-based with some changes. And so bid comes in. For the most part, we have project managers that have a relationship with that customer. They're kind of on the front lines of looking at the bid, going out, they walk the projects. And then they come back in, and we have a general supervisor that goes and looks at the bids. He used to be the president of the company. Now he's in charge of bidding. That's Mr. Rick Phillips. And he looks at the bids, and then we try to figure out, then we kind of have, if they're very large, we kind of put a team together and look at the different things and things we've experienced in that area of the country and other labor issues, and try to come forth if it's a good bid or not.
Okay, great. And then once you're awarded the work, or once you are engaged by your clients, how do you manage each project? What kind of controls are in place, and sort of how do you manage the risk of each project?
Well, we have a calendar that we put out on each job, and have different points of where we're supposed to be on that project. Generally, over the last few years, we kind of try to front load the costs in the sense of, okay, we don't want to, even if the project's going better, we don't want to start taking up margin dollars, but we're trying to look, okay, here's what we spent so far, this is how far we are along on the project, and then try to figure out as we go, okay, how are we doing? Are we ahead of schedule? Are we behind schedule? Then you got to put in change orders and other things that may affect the cost at the end. Maybe you put those in at cost, thinking that you'll get some profit in at the end, but that's generally how we try to manage that.
Great. When you look at COVID-19, has that changed anything for Energy Services? Have any of your end markets been impacted? And then, have you made any operational changes like personnel management, and what's the availability of labor like?
The availability of labor has been pretty good this year. Whenever the thing hit, we were just kind of starting some of our projects in March. Some of our customers just shut everything down. So we did have some layoffs right at the beginning. On the Nitro side, like two of our largest customers closed their plants entirely. Most of those have started to come back now, so we've been rehiring. And in terms of the management, we started doing these meetings like this that we didn't do before. And so we have two WebEx meetings, and it's been actually, that part has been a positive learning experience. And the productivity that people get that are on these meetings, especially if they're out in the field, I do think there's more engagement than a typical conference call. And so that's one of the things that we did. So if you look at our quarter that ended March 30th, it was a pretty poor quarter because the March time periods when we were just kind of getting started on a lot of our jobs, and then it's okay, we're shut back down. So now we're kind of in that stage. I'm going to guess June this year kind of looks like a March. Things started opening up middle of May, and now I think almost everybody now is back and trying to get going. If they haven't got back, going back to full speed.
Okay. And then just to clarify too, over the winter, you have some tougher operating conditions in the areas, the regions you work in. So, hence your third fiscal quarter is sort of when you start back up.
Right. Generally most of our customers kind of stop working somewhere around a week or two before Thanksgiving. There'll be a few things that go on until Christmas. They pretty much stop everything and then kind of restart everything at the beginning of the next year. Usually kind of come back in, maybe do a little clearing work, a little bit in February, and then come back in March and try to get things going in March and April.
Great. And you recently hired somebody to run CJ Hughes, or to bring in a manager at CJ Hughes. Can you talk about that decision and what Chuck Austin brings to the table?
Well, Chuck is one of the first. Chuck started working his career at CJ Hughes in 1979. He started off as a welder, and he was, vice president of transmission in the 90s. He left to go to a smaller company, built that company mostly on the distribution side to a size pretty comparable to CJ Hughes. On the distribution side. They never did quite as much transmission work as we did. They tried to do kind of $10 to $20 million only, kind of limited themselves on their transmission work. So Chuck left there in 2015, and I've been recruiting him since 2015 to come over. He went to another company for a year, has done some consulting with us over the prior year, and so we're really excited to have him on board. I think you're going to see Chuck's going to be a big winner for us.
Great. You sort of alluded to it before, but can you talk about the current bidding activity and sort of what the outlook over the second half of the calendar year is? And then, has the recent recovery in energy prices improved the outlook for any of your end markets?
Well, the energy prices really have a big effect in our midstream transmission business, and it's been a little soft. Even was soft before the COVID. It seemed like there was fewer bids. But on the other hand, there's been fewer competitors, especially coming up from out of the South and out of Texas. We're seeing less of that. We're starting to get more of those bids in now, so we're feeling better that those type of jobs, there's going to be more of that available. On the distribution side, a lot of that stuff, the smaller type work, it got delayed. So a lot of that work's still there, and we're starting working on that right now.
Good idea. You talked about layoffs before, but it sounds like you participated in the Paycheck Protection Program, or the 3P program that was in response to COVID-19. How much was the loan, and what portion do you think might qualify for forgiveness?
So we started having layoffs in March once we realized these jobs weren't going to get started. And this is before we were sure that we qualified even for the PPP program. As soon as we found out we qualified, we stopped laying people off. So we kind of reassigned some folks to doing some stuff around the shop and did some other things. We've been hiring at CJ Hughes nearly as fast as we can, trying to get good quality people in here. And the outlook actually is better than it's been the past few years. We've had some really good people, and some of those are contacts of Chuck's. So we feel good that we're going to be adding throughout the summer. We kind of had a preliminary look at it. We feel confident that more than a majority, if the rules are kind of how they were at the beginning, we feel confident that the majority of the money will qualify for forgiveness. But obviously there's even change. I think last week they passed a new bill that extends the time frame on the qualified period for the payroll protection. So we're still looking into that, trying to figure out which way we'd be better off to apply for the loan forgiveness.
Yeah, I apologize. I think it's the Payroll Protection Program, not the Paycheck Protection Program. When you, it looks like too that you're in the progress, or you had a temporary extension of your credit line. Any progress in extending that further out?
We're still in negotiations on that. We feel confident that we have enough, with the PPP loans, that we have enough capital to, fund us throughout the rest of the year.
Okay, great. And you've had litigation ongoing for, I think, of the past couple quarters, we've been looking for a resolution on that. Can you talk about when potentially you might see a decision on that litigation, and if you do prevail, how much have you asked for in your lawsuit?
I think right now our total damages are right at a little less than $14 million. We just got through our motions for summary judgment April 15th, and we were thinking we would have an order from the judge within a month, and we still haven't. That would set the trial date. So I think that would depend on the judge's schedule, but we feel confident that we'll prevail, and we might not get the 13-7, but we feel confident that we'll prevail in the case.
Okay. And when you look at, Energy Services America, can you talk about what you think your greatest competitive strengths are? And then where are the best opportunities as you look out over the next several years?
Well, I would say our best competitive strength is, we've been in the marketplace for CJ Hughes for 70 years and Nitro for 60 plus. We have great relationships, recurring revenue with, very, very great customer set, Fortune 500 type customers. And so, you kind of say, okay, where's this market turning? I still think there's a great opportunity in the distribution space and natural gas, and more of these companies are going to want to outsource to contractors to do more of the things that they do. These larger companies more and more are trying to do less and less and have less workforce, and so we're there to help them. We have a great relationships with all these. So I think we always kind of get every second look in terms of being the preferred contractor and being the highest quality producer. That's what we try to be. We don't always try to be the lowest price. So it's always somebody that'll come in the market, and especially on bigger projects, and be very aggressive to try to get the work and then figure out how to make money on it. So I feel like we're in a great position. We have a great balance sheet. I feel like we have a great future.
Okay. And as you look out, what do you think your biggest challenges are over the near future? And is it regulation, capital, or something else?
I think we're trying to make this transition to more consistent earnings, more consistent performance. And I know that's what's frustrated our shareholders. They come on board, they see a few really good quarters, and 2 or 3 bad, 2 or 3 good. And so I think as we make this transition more away, trying to watch these large transmission jobs and say, this is just a very tough business. This is a $30 million pipeline is not 3 times harder than a 10 million, it's 10 times harder. It has 10 times as much risk for things to go wrong. And as we try to transition that, it's a challenge to continue to communicate with our shareholders and hopefully have a company that can be rewarded by a better market multiple, that more consistent earnings, you'll go back to paying a consistent dividend, not just maybe annually, but try to get to a quarterly dividend. And I think that's the biggest challenge.
Great. Well, Doug, we really appreciate your time. Thank you for participating, and it's been a pleasure learning more about Energy Services Corp of America. Thank you.
Thank you, sir. Appreciate your time.
Oh, thanks for bringing Energy Services of America Corporation to us. I really appreciate that. And it seemed like there was a couple of key takeaways here that I got, and I'm going to be curious about what your takeaways were. One of my takeaways was the transition to smaller, less complicated jobs, and how that might increase the predictability of this company earnings and so forth. Was that one of the key takeaways that you came away with as well?
It is, Mike. In the past, there have been a couple larger transmission jobs that have gone awry, whether it's just execution or higher labor costs because of a very tight labor market in the Appalachian market when these projects were going on, or just the overall size. When you have more competition and more bidders, it does tighten margins sometimes. So, as they transition away from those, the smaller, more predictable jobs, I think that's going to help, their execution, and it'll hopefully help their predictability. And ultimately, it, as Doug mentioned, could help their market multiple.
And certainly everybody's talking about how these companies are coming back out of COVID, and it sounded like their backlog was improving as well as bidding activity. Can you just talk a little bit about your thoughts about how that business is coming back?
Yeah, I think we are passing the point where the uncertainty that was created by the COVID-19 virus is abating. And I do think that as companies, look into the second half of the calendar year, they are starting to be a little more, they're starting up projects that were either put on the back burner or potentially just delayed, and becoming more confident in the future. I think on top of that, a better energy market, especially for natural gas prices, is helping. And I do think that, at the same time with the labor market where it is, I think that's helping their overall predictability or improving the outlook for the second half of the calendar year.
And Poe, you asked a question about a lawsuit. I was wondering if you could give us a little background on what that lawsuit might be.
Yeah, it was a customer dispute with a customer as far as the cost, change orders, I believe, and just the ultimate cost of a project. And it is winding its way through. They did have a potential for a motion for summary judgment. If that is not granted, they'll set a court date. And this is potentially something that could develop as soon as the next quarter or potentially the quarter after that. But we do expect that it is winding its way through the courts. It's upwards of $14 million, so it could be a good development for the company if they do prevail.
And you asked questions about the liquidity. Any concerns there?
No, they did have a credit line that expired at the end of or in the middle of April. They did get a 60-day extension through the middle of June. Since it's an undrawn credit line, I'm not concerned. On top of that, they were able to, because of their size, able to access the Payroll Protection Program or the PPP program and get upwards of close to $10 million for covering payroll, utilities, and other qualifying expenses. And under the current rules, that looks like it may be forgivable at some point in time, which would also be a positive for the company.
Well, thank you, Poe, for bringing Energy Services of America Corporation to us. If you would like to read more about this company, please go to Channelchek, CHANNELCHEK, channelchek.com for research on this company or for research on other names that Poe follows. With that, thank you.
Thank you, Mike.